Hi guys, welcome to another episode of Let's Talk. I'm with my co-host Dimitri, and we have a very special guest, Ishfaaq. Ishfaaq is a value investor. He's a popular investor. He's an elite investor on eToro, and he has his own YouTube channel, which is quite successful. I think you have around 6,000 subscribers, a little bit north of that, and the videos are always quite interesting. We get to see also from time to time a nice view of Mauritius, your home country, your very beautiful home country. And today the topic will be value investing. What I notice when I go on eToro, but also on all types of social media, is a lot of people, really a lot of people, maybe 3 out of 4 investors say they're a value investor. So I'm going to ask you this question is, what is value investing and why are you a value investor, right? Like how would you define a value investor and why do you think you fit that category?
Okay, hi, everyone. Hi, Akim and Demetris. To answer your question, why I believe, what is the definition of value investing? A value investor, for me, it's someone that sees a difference between the market price of a stock or a bond or any other security compared to the intrinsic value. So there is a difference. This is my definition of a value investor. And now, when you're saying that 3 out of 4 claim to be value investors, in this case, I think they put the value in something else, but not really in what maybe I, as a value investor, would put in it. So maybe for them, they are investing in growth, so they see the value in the growth, which for many people might be something different, growth investor, value investor, but it's okay, I believe, to combine the two together. But I am more the classical definition of value investing. That is to find good companies where you can find the intrinsic value with, let's say, high accuracy.
I was looking at the definition earlier, and then I will let Dimitri also, opine on value investing. I was looking at the definition earlier today, the academic one, really the one we can find in a dictionary of value investing. Value investing is picking securities that are undervalued. As simple as that. Just those couple words. So it's a very general definition, and I think that's the problem of the terminology, is because people can use it in many different ways. So even a crypto investor can claim himself or herself a value investor if he or she considers that Bitcoin, for example, Bitcoin is trading, for example, under the 200-day moving average, or if Bitcoin is trading under the mining cost of a Bitcoin, right? So there we would consider, or those investors would consider that Bitcoin is underpriced or mispriced. And that is a bit the problem with the term. And that's why, at least me personally, I prefer to avoid the term value investor, because the definition is so general. Every investor tries to buy good stocks, or that they think are good stocks, but for cheap. And kind of every investor is a value investor. What do you think, Dimitri? This is how I see it. But
yeah, my definition of value investing is the Buffett way, is the Ben Graham way, to buy something cheap based on the metrics that you have in mind. Some people like price to book, some people like the price to earnings and all that, and then hold them and hopefully let them compound. If it's a good business and the fundamentals are staying intact, there's no reason for you to sell. So that's my definition. And I agree with you, 3 out of 4 people that you see, they are value investors, and then you just click on the portfolio and you see in their QQQ on leverage, and then you see NVIDIA, which it doesn't fit the classic definition of value investing. But what I appreciate about Ishfaaq, and if you ask me to give my top 3 value investors on eToro, you are one of them, because you share your analysis. The analysis that you do for any given stock, you share it with us on Twitter, because I follow you on Twitter as well, and you share content there. And then if you make a mistake, you go back and say, you know what, I made a mistake there. I sold early, or I hold too much, which I appreciate. It's refreshing sometimes to see someone to take in accountability of their mistakes. But yeah, my definition is quite different. I guess everyone's definition when it comes to this question is quite different. So is it come down to you? Like, what is your definition and how you go about it?
Like, can you be also, if I can add a quick another question, a value investor, is it only stocks? Is it only about selecting businesses? Can it be other types of assets? Can you be a value investor investing in other things?
Yeah, so I will give the definition that is in The Intelligent Investor by Benjamin Graham. So for him, value investors are the opposite of speculators. So speculators, you gave the example of Bitcoin. It can also apply to gold, which doesn't have an intrinsic value by itself. So you're just betting on it because someone else later will pay. You expect someone will pay a higher price. I'm not saying it's wrong. Maybe you see there's inflation and gold would be a good investment, but it's not value investing in that definition of Ben Graham, because you're investing, you expect someone else to pay a higher price. While if you're investing in a company, even if the stock market did not exist, the company would still have a value, an intrinsic value. And now to answer your question about whether it's just stocks, no, it can also be bonds. It can be real estate, because there is a cash flow. You can calculate the intrinsic value. It can be a farm also.
For example, there's some cryptos where you can stake. So, right, the staking of, for example, Cardano, and then you receive also, right, some cash flow, or actually some Cardano flow back. Why is that not sufficient to be considered in that value investing bracket, the crypto staking? Because there it's actual cash flow that you can, model as well. That's a tricky one.
I don't really know how it functions, but from what I can understand, because I did not go really into details in that, but from what I understand is that it's mostly based on expecting that this crypto it's going to exist in the future, and that the cash flow will keep coming. So it's just the expectation that there is going to be a market for it. While if you give me a business, even I told you, if the stock market did not exist, the business would still be here. If companies are taking debt, and the bond would still be here, even if a bond market did not exist. So I believe this would be the main difference compared to the crypto one. And it's also about the usefulness. So does it really have a use? Is it creating more capital?
Can you still be a value investor in the US? This is probably directed to Dimitri. Can you be a value investor in the US with the valuations you have today? You mentioned Warren Buffett in the beginning, so I'm circling back to that. Warren Buffett started investing in a time where, you could easily find US stocks trading at 5 times earnings, 8 times earnings. But nowadays, the good businesses, they're trading north of 20 times earnings. Very, oftentimes 30, 40, 50 times earnings. Can you still be a value investor in the US? I'm asking the question because Ishfaaq probably is not so convinced because most of the stocks, or at least a big chunk of the stocks, seem to be outside the US. There are some US stocks in there, and we will go, specifically to some of them. For example, Meta. Why is Meta a value stock given, the very strong valuation it has today? But we'll come back to this. But I want to hear Dimitri's opinion. Can you still be a value investor in today's US stock market?
So this is the problem with value investing, in my opinion. So all the books about value investing from 50 years ago, existed and were written in a time that the markets were not global. A guy in India with an internet access and a phone could not buy into the US market. Maybe the valuations were high back then, but the majority of companies were not technology companies. They were more industrial and financial.
Industrials, chemicals,
and energy.
financials.
Energy, financials, all that, which usually, I mean, it's much easier to determine the value of a bank and ExxonMobil than determine the value of NVIDIA, Amazon, and all that. So when this new breed of companies enter the market in the last 20, 30 years, then the whole thing changed. That's why the value investing definition is so vague. And you can't pinpoint which one is growth and which one is value and all of that. But to answer your question, if you can do value investing in the US, yes, you can do it, but you're gonna have to buy in days like August 5th. On August 5th, on that day that everybody was running around, you have to be there with cash, and you have to buy them in deep value, or buy in March of 2020, which I guess Ishfaaq, you did some buying there in March of 2020 because you had a really good 2020, or was it 2021? And
2021.
2021.
We'll come back to the performance, which is quite impressive, by the way, of Ishfaaq. We will break it down and see what happened those years. But clearly, I don't mean to speak for you, Ishfaaq, but clearly it seems you would disagree with Demetri, because you have Meta, you have Apple, you bought them in February and April 2024, so this year. I mean, they look expensive. If you can, guide us maybe to your way of stock picking, how you select the stocks.
Yeah, just I wanted to clarify something. I did not buy those stocks in February this year. It was because there was the new equity requirement for eToro. So when I put more cash in my portfolio, that's why I did some. I closed some of the trades and reopened them. So if you look at Apple, I actually opened the position from 2016 to 2018, and Meta it was 2022. But with Apple, at some point it was 15% of my portfolio, and I took most profits, which maybe I will say I took a little too early. While with Meta, I'm still holding from 2022, and I wish I had bought more. So it's not really because in February I believe they were undervalued, which I don't believe Apple or Meta are undervalued, but still, they especially Meta, it's still a company that can grow, and my minimum requirement is to invest in a company that is growing its intrinsic value, not really the stock price, its intrinsic value by at least 15% a year. And I can see that with Meta. Intrinsic value per share, they also buying back share. And I can see that with Meta. So even though maybe it may be a little overvalued, I'm still willing to hold.
So tell us a little bit how you choose your stocks, because it's quite interesting. You have stocks from different places, US stocks, Chinese stocks, UK stocks. You have quite a mix there. So it seems like you're fairly agnostic about the geography of the business, right?
Yeah, it doesn't really matter for me that much where if there's a good company, I will invest in it. But you have to be more careful, taking margin of safety if it's not in the US or maybe it's in China. And we all know what happened with Alibaba. But the company, if I'm looking at the intrinsic value from when I started investing, of course, the intrinsic value has been increasing, but also the risk associated with it has been increasing. That's why I haven't increased my position by that much. But if I find a good company, it doesn't matter where it is. And of course, if I'm taking that risk of investing in a country where I'm less, we know less about how the country operates and everything else. So I'm going to invest maybe a fewer amount there, or maybe take a bigger margin of safety. So let's say if I see the intrinsic value at $100 a share, and I will invest only if the company is trading at $50 a share, something like that. But if it was a US company, then maybe I could invest at $70 a share.
So how do you come across them? Because for me, it's like, it's if you see my portfolio, it's like a bit concentrated, and it's like the companies that I know in the market that I know. And by reading the Wall Street Journal and by reading Bloomberg and watching CNBC, maybe a company will come across me and say, okay, that country is interesting. Let me put on my watch list. And then you start following the company. You're getting to know who the CEO is. And so how do you find companies? Because in some point you add new positions in your portfolio, correct? So how do you select them? Do you go out and start looking for them, or you just do what you do every day and reading the news and stay updated with the news, and then something comes to you, and then you say, okay, let me look into Meta. What is going on with Meta? I'm just giving Meta as an example. So how exactly do you go about it?
It's more like what you do, that you just go reading on Wall Street Journal, Financial Times, and even on Twitter, sometimes other people are going to post maybe these are companies with modes. So I have a spreadsheet where I just write a company and a link where I got it from and why I have added it there. So I would say, let's say this company has a mode. So I will write company with a mode and I put the link. And so the spreadsheet, it has a row for how the stock did for the past year, the P ratio. So if later on I see that okay, this company, since I added it, it has been going down, the stock price, so probably I should look further into it. It's not on the same day because there are so many different companies, and I'm not going to waste my time on each one of them. Only if I see something that is happening, then maybe I can look into it. And when I look into it, I'm going to look at the competitors. I'm going to look at maybe not just competitors, but in this industry, let's say mortgage. I have one mortgage insurance company, so I will look at the banks, the mortgage originators, and everything else. Try to understand the industry, but it's not really going off the specific countries, specific industries.
Okay. Akim, we lost your sound. We lost your sound.
Oh, I'm back. Dimitri, you asked about stock picking. So how to pick those stocks.
Yeah.
So that's the entry. But what about the exit? Because that's a debate that we have. Dimitri is already laughing. Because that's a discussion Dimitri and me, we have all the time in private, when to exit a stock. And in value investing, in principle, the way, Ishfaaq, you define value investing, which is buying stocks that are trading at below their intrinsic value. If we go by that definition, that means that as soon as the stock trades above its intrinsic value, you should exit it. Is that right?
Yeah.
Is it as simple as that?
But in theory, yes, it is that simple. But in practice, and especially, I gave you the example of Apple. I told you that I sold a little too early. So whenever I'm calculating the intrinsic value, I try to be as conservative as possible. So even if Apple today, the earnings are around $100 billion, the free cash flow a year. So I'm not going to estimate 100 billion. I will take a margin of safety, maybe 80 billion. So in that case, when the company actually reaches the intrinsic value, but in reality, I have been conservative. So it can still go higher, and the company, if I was not that conservative, would be undervalued. So that's why I'm not doing that. I'm letting it grow. And there's that saying, don't let your winners run. So if there's a company growing its intrinsic value, earnings are growing, buying back shares, I may be holding it. And how exactly I consider now selling a stock, it all comes to the opportunity cost. If there is something else in the market which I see might be growing better, it can be something already in my portfolio, which is much better than looking for something else. But now if there is something else and I look at the worst company in my portfolio, if that new company is better than the worst, then I should replace it. Which is not something easy to do with today's valuations.
It's not. It's quite hard. The exiting is it's the hardest part as far as I'm concerned. To explain and to do it right.
Yeah.
Because usually when you sell they're still going up, and what you bought is going down for the next in the beginning, and then you're wondering why did you do that to yourself. So it's the hardest part of investing as far as I'm concerned.
It is. If I may, I will try to share my screen, just if you can confirm that you see it. It's Ishfaaq's portfolio. Are you able to see it?
Yes,
Yeah.
that's it.
Yes. Okay. So I think Dimitri, you can actually go ahead because you had some questions here about those 2 years of extraordinary returns, where I mean over 100%, where you more than doubled the value of the portfolio.
You know what? The question I have, okay, so taking from my experience, the 2017 128%, it's extremely impressive, but it was the beginning of your career. So I'm just guessing your portfolio was smaller and more able to maneuver around. But the 6 year in, getting almost 150%, tell us what happened there, if you remember.
Okay.
Was your strategy the same since inception? That's a complimentary question.
I started, if I will call it, value investing in September 2016. I opened my account on eToro in March of 2016. So the first few months was very bad. I was reading The Intelligent Investor at that time. So what happened in 2017? It was Apple, which was my biggest position, and I had 5% in Bitcoin and Ethereum. And we know there was a bull market in 2017. So in December 2017, I sold, and just a few weeks after that, the crypto market crashed, and I did not get into crypto again. So maybe out of the 120%, maybe around 60% of that would come from Bitcoin and Ethereum.
Yeah, but you said that you were a value investor since 2016. How did you pick Bitcoin, Ethereum? Was it just like the beginner craziness, something like that?
Yeah,
or
the beginner craziness, and also there was some gold there. So I was still figuring things out, and 80% was in stocks, but there was some gold, some bond ETF. I think so. I'm not sure, but there was definitely 10% in Ethereum and Bitcoin. So I started selling when Warren Buffett called it a bubble. Jamie Dimon called it a bubble. So I was holding. I think I still hold JP Morgan Chase from 2016. So when these people are calling it a bubble, I reconsider that really it's the definition of speculation that Ben Graham gave in his book, and it's time to take a profit.
And probably you went through some transition here in 2018, right? Where you started being a pure value investor, right? Was it more or less in that period of time, 2018, 2019, where you removed all the crypto, all the gold?
So the last crypto was in January 2018. And then in 2018, there was also with Apple, there was the trade war and everything. So that's why it was negative here.
Yes,
and then 2019
with Trump and China trade war.
China trade war, yes.
And how about 2021? I know Demetri is boiling. He wants to know what happened 3 years ago.
I want to know the secret because I'm a popular investor as well. I want to know the secret.
this kind of
in
this kind of return looks like you need to be 100% in Bitcoin, then you would get 150%. But
what
that's
happened
not what happened.
in September 2019. So I follow many of the great investors. So Michael Burry published his 13F, and there was that company there called GameStop. He sent a letter to the management of GameStop asking them to buy back shares. And I saw something that the company was trading at below its net cash value, and they were buying back shares, repaying their debt. There was also the next console cycle that was coming. So it was a deep value, a cigar stock. So I invested in GameStop, and then in 2020, early 2020, February, they were buying back so many shares that there were more shares outstanding being shorted than in existence. So I decided to invest even more in GameStop. At some point, it reached 8% of my portfolio. That's the maximum I invested, and it became the largest position in my portfolio. And we all know the rest, what happened in 2021.
So you
because it's impressive in 1 month in
but
January.
This was not because of the Reddit thing or anything like that. It was a value investing. From my point of view, it was just value investing. Of course, the short squeeze, that was a bonus, but I invested as a value investor. It's not like with the Bitcoin that I was still trying to figure out things.
So you got into it before the craze went before the craze went public, right? When was everything went public on the media, and then everybody and their mother joined GameStop, going long on GameStop, because you probably got early and got exited early.
I started investing September 2019. So I kept investing during the COVID. So I was buying at $2 a share. I'm not sure how much it is because they split the shares recently, but at $2 and being able to sell at over $400, it was crazy. So the total profit on that investment was 3,300% on all the GameStop shares.
And you probably sold a little bit early. You could wait a bit longer. You didn't.
So actually, I sold at the top. On the day that it peaked, that was the day I sold.
All right.
So I don't know how it happened. And even even with the Bitcoin in 2018, I sold the day that Bitcoin peaked at the time, and then it dropped to 3,000.
Yeah, you know what? You know what? We all have good luck and we all have bad luck. So
yeah.
when you get lucky, just make sure you capitalize on it. And listen, if I will be the happiest man alive if I get 150% return in a single year. I'm just
in a single month.
Yeah, in a single
it happened
month.
in a month.
In a single month, yeah, and especially because I'm guessing by year 6, your portfolio is already big in terms of monetary value. So that 150 in a single month is basically double and then some your net worth in a single month. I mean, if you put, because my net worth is basically whatever I have on eToro, okay? So if it goes 150 in a single month, I'm like, I just became twice as rich in a single month. So I'll take that. So Akim.
Yeah. Talking about, we mentioned the words luck, but also a bit of, but I mean, just I guess what I want to talk about is lottery, because we mentioned lottery, and lottery is your first asset in your portfolio. So I'm saying it as a joke, but it's Française des Jeux. It's a French lottery business, and it's your top asset. It's over 10% of your portfolio. When did you start investing in it? And what is the reason for making it like really your top stock? Do you see something happening in the lottery business in France. That's weirdly specific.
So yes, I started investing in January this year. And first of all, as a business itself, it has a moat because they are the only lottery operator in France in terms of the national lottery. 20% of the company is owned by the French government, and they have a deal. The company has been operating since 1933, operating the French national lottery. And the deal, it only became public, I think, 2019. So since then, 20% of the company is owned by the French government, and they have the deal now to operate the French national lottery for 35 years. And probably it's going to be renewed. So they have this move that nobody is going to come here and compete with them. They have the full protection of the French government. They acquired this lottery operator in Ireland. So the same thing there, but there the deal is for 15 years, which is not bad, and probably it will be renewed. No one to come and take their business in Ireland too. But the lottery is not something that is going to grow at a fast rate. People play every year. It's growing maybe 4-5% a year, the business revenues and everything. So when they entered the online betting, online gaming, this is where the growth for La Française des Jeux is coming. And they have also made some acquisition. But they are now making an acquisition of a Swedish company called Kindred, which happened after I invested in the company. I started investing in January, and the deal was in February. So the acquisition is supposed to close in November of this year. If they acquire Kindred, it's going to bring, I calculated the intrinsic value of Kindred without considering the acquisition. And I believe that Kindred is undervalued. So FDJ is acquiring a company that is undervalued. So they're paying 2.8 billion euros for the acquisition, but Kindred is worth more than that. What happened with Kindred, if you look at the stock price, it has been dropping in recent years, was that their main market was in the Netherlands, but they did not have the local license to operate there, but they exited the market. After 6 months, they got the license and entered the market again. So to sacrifice your main source of revenues income for 6 months, the market did not like that, obviously, but they did that. Now they are not worried about not being about regulators. So the business is safer. And FDJ just took this opportunity to try to acquire them when the stock was already down. Okay, if you look at the competitors of Kindred, most of them have huge debt, and I'm sure that at least one of them is going bankrupt in the coming years. So Kindred and FDJ, it's a good combination. That's why I'm willing to invest quite some amount on this company.
Can you say it again? Which one is going to get bankrupt? Did you say Kindred might go bankrupt?
No, Kindred is the one being acquired. So there's Evoke, there's Flutter, it's mostly operating in the US. There's entails. I don't know which one, but they have so much debt, and they're losing. Yeah, they have so much debt, they're losing here. Probably there are 4 or 5 of them. Probably at least one of them might face some troubles. Maybe not go bankrupt, but might face some trouble with their debt in the coming years.
Right. I have a question for you. And then this is usually the internal questions I have asking myself. And because we just discussed, you are in France and in multiple countries and geographies and sectors. Is there a sector or a country or a currency that you want nothing to do with? Is it like, because I know for me, it's like airlines. I'm not buying airlines. If you give them for free, I'm going to give them back to you. Okay, airlines as companies, there's nothing interesting about them. We discussed this so many times with Akim. He's laughing because I'm just repeating myself over the episodes. But
hey, airlines, a lot of them are trading below their intrinsic value, by the way. A lot of them are trading undervalue. And I find it surprising Ishfaaq doesn't have any airline. I think you don't have any airline. And it's very easy to measure the value of an airline business. You have the hard assets, you have fairly predictable revenue, cash flow. Sorry, I interrupted your question, Dimitri, but actually it's a pretty good one about the airline. Maybe we can return on that.
The airlines is just in a different category. You might have the best airline there is, and then one Boeing airplane goes down in some country somewhere, and then it goes down for no reason. So for that reason, airlines, for me, I like them at all. But you, Ishfaaq, do you have a sector or a country or a currency that you say, you know what, I'm good, I'm not touching that, it's off limits, and why? If something comes to mind, give us an example, something you wouldn't touch or you wouldn't invest and risk your money, and it's not just your money now, because you're a popular investor and you have other people's money. So
you have, I think about 1,000, right? Investors.
Have 1,000 copiers, yeah.
Copiers that follow your trades.
Yeah.
Tell us, Ishfaaq.
Tell us.
Okay, first one I will tell you is airlines. Definitely, I'm not going to invest in airlines. I will not invest again because I invested in one airline in 2020 when everything was grounded, Alaska Air Group. And if you get to the competitors, the fifth largest airline in the US, compared to the top four, it's the best. It's still the best, but it's like a commodity, and then all prices are going up. They have to keep lowering prices. So overall, even though it looks undervalued, if maybe you're considering the earnings today, that doesn't mean that those earnings are sustainable. So overall, I believe that airlines, they have negative intrinsic value. Now, if you're going to ask me, another one I will avoid is auto manufacturers. It's the same thing. Everyone is trying to sell a car that is cheaper, and it is a capital-intensive industry. So everything capital-intensive, I try to avoid, except maybe, go on.
I'm sorry to interrupt you. Do you put the electric vehicles and the combustion engines into the same category, or do you separate them?
I put them in the same category.
Okay. So please continue. Continue your thought.
Yes. I look, because I had Stellantis in my portfolio, I sold this year at a loss. And compared to the other ones, they are the better balance sheet. So, but when you're thinking about, when I saw the lost earnings, how much they have lost market share, it's something I cannot explain why this is happening. And probably in 5 years, they are going to increase market share, but you cannot be sure about that. It's so competitive. So when an industry is competitive, like airline and capital intensive, I try to avoid them. You asked about countries. I will avoid a country where the currency is devaluating at the high rate. So there are no Turkish companies on eToro, but if there were, I would try to avoid such countries. Even though maybe it's getting better, but the fact that in recent years there have been such huge devaluation, I would avoid it.
Yeah, that's a good. Yeah, that's a good answer. The Turkey.
We're approaching the end of the episode. So I don't know, Dimitri, if there were some other points maybe you wanted to bring to our attention. What did you learn about value investing, actually, after this very interesting conversation with Ishfaaq?
Are you asking me?
I'm asking you.
Because
you told me value investing doesn't mean anything.
I learned a lot about Ishfaaq and about his strategy, but I don't think he made a case for value investing, and not because he can't, it's because it's so complicated. Each investor has a different way of going about it. So my value investing and your value investing and his value investing is not going to be the same. So, but I get Ishfaaq's point of view by the way he selects his companies. But the question mark, what is value investing still remains. Hopefully we can get Buffett on the podcast and he can give us an answer. And you know what? I don't think he can give an answer for what is value investing, because it's changed over the years, the definition and the game changed, the valuations and technology.
Mhm.
So, and
Because if we take the definition of Wikipedia, just to take it, the sentence goes as follows: value investing is an investment paradigm that involves buying securities that appear underpriced by some form of fundamental analysis. So it's pretty vague.
it's
By
too
some form of
yeah,
fundamental analysis.
it's too open
What
to interpretation. Like,
the way what I like today, though, is the way Ishfaaq is defines value investor. For me, he might be the first proper value investor that I meet, because he defines fundamental analysis as looking at the book value of the company, at the intrinsic value of a good business. So for me, for me, our guest Ishfaaq is the first one that I meet that is a proper value investor. But this doesn't mean that the value investing definition is not vague. It is. I think we can agree that it's quite vague and it's interpreted in many different ways. Also through time, value investing in the 60s is different than value investing today. For example, Ishfaaq, you bought GameStop. We discussed that today. For you, that was a value investing move. I don't know if if the investors from the 60s, the famous ones, would have bought GameStop, it's hard
It
for me to
doesn't
picture
use my
Warren
mind.
Buffett. It's hard for me to picture Warren Buffett or Charlie Munger buying GameStop. I mean, they would have bought GameStop,
Yeah.
right? If it was a value investing move.
No, not really. I don't think Warren Buffett or Charlie Munger would have bought it. Maybe the early Warren Buffett during when he was managing his partnership, but Ben Graham maybe could have bought it because this is more in deep value investing territory where it's not really about the business, it's more about what's on the balance sheet. And when Ben Graham was investing for him, he didn't care that much about what the business was doing. And he was investing in a very diversified portfolio. So, and it was in the 1930s, many companies were getting liquidated. So as long as the liquidation value is higher than the stock price, you're getting more for what you're paying. So that was his strategy. But later it had to change. And if you look at the later edition of Security Analysis of The Intelligent Investor, he considers more about the business, the growth, and even Warren Buffett. It's only when he met Charlie Munger that really he focused more on the business part rather than just the numbers. So maybe a young Warren Buffett might have got interested with GameStop. And this is something that even I learned because you did not ask me about 2022, 2023. You look, my performance after GameStop was not that great. So what happened? I had so much cash now. I was looking for the next GameStop, and all did not end well. So that's when I learned that yes, the value investing can work, but in this environment that we are, it's very rare that you are going to find such a good opportunity for it to work. With GameStop, there was the short squeeze, there was next console cycle, there were so many catalysts on the stock that it's rare that you're going to find something like that again. So that's why today I'm moving more towards the value investing, looking at the business. Probably if we have a bear market, we'll find the deep value again, but it's not the case right now.
And to be fair, though, value investing, if you are a value investor, like an older value investor, a 50, 60, 70-year-old guy, and you are a pure value investor, you probably didn't invest into the Mark 7 in the last 20 years. You didn't invest in Microsoft and Amazon, and okay, exclude Tesla. Tesla is off limits, but the rest of them are really good companies, Meta, Apple. So if you missed those for the last 20 years because they have price to earnings more than 20, or whatever the case may be, the traditional metrics that value investing, which I don't know what it means, doesn't fit that. So you probably lost 2 decades of good returns based on being of believing in an ideology, let's say, of value investing. That's why I'm not describing myself as a value investor. I like some value, I like some growth, I like some crypto. I'm very flexible, but it has to be in the United States. That's where I draw the line. It has to be in the US, and then everything goes in it. Some sectors, of course, you exclude for whatever reason. So that's the problem I have with value investing. Now with you, of course, I like you're a nice guy and you have excellent returns, and I enjoy your content. And I told you before, I appreciate when someone goes on Twitter and says, you know what, I was wrong about Meta. I should have sold early. That I appreciate. It's refreshing. It takes some guts to do.
It's very rare. It's very rare.
Yes.
We see a lot of bragging, and this is really something that we can appreciate with Ishfaaq, is the humble nature and approachable nature as well. And perhaps value investing has that human component where you yourself as a human, you also need to have some human value, right? Before to be able to be a proper value investor. Maybe I'm going too far now in psychology and philosophy, but I think if you want to be a proper value investor, you need to also have those personal skills of being able to be humble and to see, to realize when you made a mistake or not, to not have those biases like a lot of us have, unfortunately.
Yeah.
What do you think, Ishfaaq, are the most important, and perhaps we can conclude the episode on that, the most important skills someone should have? I'm not saying necessarily from a psychological perspective. It can be mathematical, it can be, I don't know, political knowledge. What are the most essential skills or components or talents for value investor to succeed in value investing?
You mentioned humility. I agree with humility, but not in the sense that you're bragging about your returns, but humility in terms of knowledge, what you're knowledgeable about. And you get the example of Demetris about the Magnificent Seven. So I'm not saying that, let's say, Nvidia is not a good company, but the industry is changing so rapidly that it would be a little too arrogant for me to come and say I know how Nvidia's business is going to be 5 years from now. And I don't know. I don't think anyone in the world actually knows if the earnings are going to grow that rapidly. So if I don't know that, how can I put an intrinsic value on that? There are companies in my portfolio growing at over 20% a year, but I'm more certain on that. And of course, when I'm trying to calculate the intrinsic value, I'm not going to take 20%. I will take less than that. I'm always being conservative. So it's about humility. You should know what where your circle of competence is, and don't try to go beyond that. That's the most important skill. Oh, and second one, of course, is don't be too emotional. The market, it's going to give you a price every day, but focus on the fundamentals, on the business.
Thank you very, very much for these reminders. I think it was really an interesting conversation, Dimitri, that we just had with Ishfaaq. Thanks a lot. We will add the links to your eToro portfolio and to your YouTube. You have a very interesting channel with a lot of really interesting videos where you do a lot of deep dives on your own portfolio and also on the market. So thanks a lot, Ishfaaq, for joining our episode today. And guys, see you next time.